Hello and welcome to the Business Standard Morning Show. My name is Ishan Gera and here are the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
The ongoing battle between Amazon and Reliance over Future Group took yet another interesting twist last week when the Indian giant backed off, abandoning its plan to acquire the cash-strapped firm. Jeff Bezos has been looking to expand foothold in India's nearly $900 billion retail market, and so is Mukesh Ambani. What would the fall of this deal mean for the retail ambitions of Amazon and Reliance? Watch this report to find out.
"20 months after announcing that it would buy Future Group's retail, wholesale and logistics business for Rs 24,713 crore, Mukesh Ambani's Reliance Industries on Sunday backed out of it. Reliance said the deal cannot be implemented after the secured creditors of Future Group's flagship firm Future Retail, which operates Big Bazaar and Easy Day stores, voted against it. Once India's second largest retailer with more than 1,500 stores, Future Retail, along with other group companies, are now expected to go to the National Company Law Tribunal as lenders seek to recover their dues of almost 29,000 crore rupees under the Insolvency and Bankruptcy Code. The deal has been at the center of a lengthy legal battle between Amazon and Reliance. Amazon has challenged the takeover in various forums and obtained legal injunctions that stalled the deal. In August 2019, Amazon had invested about 1,500 crore rupees for a 49% stake in Future Retail's promoter entity Future Coupons, indirectly gaining a 4.8% stake in the former. Amazon says its 2019 deal came with an agreement that bars Future Group from selling its retail assets to Reliance without its permission. Amazon was looking to expand its foothold in India's vast retail market. In 2018, Amazon and private equity firm Samara bought food and grocery retail chain More from Aditya Birla Group. When it comes to tapping India's retail consumer base, companies like Amazon face more hurdles. Foreign investment in offline multi-brand retail is tightly controlled. India allows 51% FDI in multi-brand retail under the government route, subject to the investor fulfilling several conditions. States can also decide whether to allow foreign-owned multi-brand stores. India's retail market was worth $883 billion in 2020, according to Forrester Research. The market size is expected to grow to $1.3 trillion by 2024, dominated by the grocery segment. With the Future Group's retail, wholesale and logistics and warehousing units, Reliance was aiming to bolster its JioMart app and increase its presence in the online grocery delivery space.
The small shareholders when they voted overwhelmingly in favor of the deal that Reliance had brought to the table. But since Reliance has acquired so many of the assets, acquired is the wrong term. They've been able to get the leases to a lot of the offline stores and effectively taken control of those assets. They are no longer in a position where they need to spend $4 billion to get those assets. And therefore, what ends up happening is that the secured creditors, the unsecured creditors, and the equity holders in this situation end up worse off than they were before. Amazon is blindsided by this, and so one can definitely record this as a victory in the short term for Reliance in this tussle. But that said, I think Amazon will be pursuing this more aggressively. In terms of Amazon's strategy, I think this was more of a strategy to stop competition than to grow. And therefore, there is it will likely challenge the sale of these assets or the transfer of these assets in court. One should not be surprised that this will be drawn out for some time. I think one must record a few wins that have happened along the way. I think the fact that the Supreme Court upheld the Singapore arbitration was a big win for India Inc. in general. Yeah, but I don't think that accounts for the fact that if you're up against Reliance, then things are not going to be as easy as that. So I think one of the factors here is that Reliance's approach has always been to seek apology, not permission. And in this case, we can definitely see how Reliance has been more proactive than anybody expected them to be, and got what it wanted. And Amazon is pretty much stunned by the speed with which a lot of these movements have happened, and just the creativity with which it has been done.
Even as the deal fell through, Reliance is in a sweet spot after taking over 947 stores of Future Group, citing non-payment of rent after transferring the leases to itself. These include 112 central and brand factory outlets of Future Lifestyle Fashions. Reliance may reportedly bid for the remaining Future Group assets at the NCLT, leaving few options on the table for Amazon. Future Retail last month said it was committed to taking back its stores which were taken by Reliance, saying it had been surprised by what it called drastic and unilateral action by Reliance. Amazon and the lenders may also support the company's effort in this regard. Meanwhile, Amazon also might continue its legal battle related to the deal between Future and Reliance. Whatever be the outcome, Reliance will continue to enjoy its undisputable pole position in the country's retail sector, as the fall of India's original retail king and Future Group founder Kishore Biyani is sealed. As for Amazon, the value erosion of Future Group's assets in the past 2 years means its effort to make any progress on its offline retail ambitions in India
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the fall of Future Group's deal with Reliance Industries, let us turn to the meteoric rise of Southern cinema and its growing appeal among Hindi-speaking audiences. In the past 6 months, movies such as Pushpa, RRR and KGF 2 have shattered box office records. Is this a flash in the pan or a longer-term trend? Let us find out in our next report.
During a recent Indian Premier League match, West Indian bowler Obed McCoy celebrated taking a wicket by coolly swiping his chin with the back of his hand. McCoy's imitation of actor Allu Arjun's gesture was a reminder of the phenomenal run of Pushpa The Rise at the box office since its release 4 months ago. It was also a reminder of the fact that South Indian cinema has perfected the art of making pan-India movies, which appeal to both a larger domestic audience and foreign viewers. And the results are showing where they matter the most, in terms of money earned. Even Salman Khan acknowledged this. He said on Monday that it is the heroism in South films that is drawing audiences to theatres, which is lacking in Hindi movies today. In 2019, Bollywood's share in domestic box office revenues was higher than that of South Indian films. The numbers stood at 5,200 crore rupees for Bollywood versus 4,000 crore rupees for South Indian films. Meanwhile, Hollywood's share stood at 1,500 crore rupees. Things, however, have changed. An ICICI report has revealed that South Indian films dominated domestic box office revenues for calendar year 2021 at 2,400 crore rupees. Bollywood was a distant second at 800 crore rupees and Hollywood third at 500 crore rupees. Till February this year, Telugu cinema was reportedly doing better business at the box office than any other cinema in India. According to Ormac's box office report 2020 and 2021, which had been shared exclusively with Business Standard back in February, Telugu cinema's share in box office revenues had risen to 29%. Higher than Hindi's 27% and Tamil's 17% share. Now, the COVID-19 pandemic definitely had a role to play here, but there are other reasons too. So, what are the reasons behind South Indian cinema's success? Within a week and a half of its release, the Hindi dubbed version of KGF 2 has already hit the 300 crore rupees collections mark. The time taken to reach that milestone was amongst the shortest for a regional film, even when compared to RRR and Pushpa. Put simply, the southern film industry is getting savvier at creating content and marketing with each new release. Inox Chief Programming Officer Rajendra Singh Jayala gave Business Standard the example of Yash, the Kannada actor who features in KGF 2. He travelled to different parts of India to promote his film. He did not simply restrict himself to the south. Moreover, Yash also engaged with bloggers and YouTubers to build up hype. According to Shringar Films chairman Shyam Shroff, the southern industry has understood what a COVID-exhausted audience wants. As they come out from under many of the restrictions imposed by COVID-19, people are seeking big-ticket and action-packed films. And the southern industry has understood this need, with all of its hit films being based on this formula. The combination of big stars, big directors, drama, and high-octane action has caught the fancy of the people. The ICICI report says that South Indian movies will continue to do better business than Bollywood films in 2022 because of their content clicking with audiences. All of this comes on the back of the fact that more big-ticket regional films are awaiting release in multiple languages across markets. But there may be an elephant in the room, the dearth of big-ticket Hindi language theatrical releases over the past 2 years due to the pandemic. What if this is, if not the only one, the major reason for the trend we have been seeing? However, there is another factor to consider. Experts have also pointed business standard towards fatigue with Bollywood stars and scripts as one of the possible reasons behind the new preference for South Indian films. Keeping both these factors in mind, what is the future likely to look like for the Indian box office?
If you look at the pandemic numbers, clearly you saw a huge outperformance as far as the regional industry is concerned. And that is why there's a huge change in terms of the mix as well. But primarily, this is because of two factors. One is you did not see too many large ticket Hindi films coming in. And that is primarily because of the states not opening up. So if you look at a state like Maharashtra, that was one of the last ones actually to open up last year in the month of October. And that is the reason, this thing has actually happened. I would not say that, Bollywood is kind of a write-off and it could be written off. But definitely the South India industry is growing faster as compared to the Hindi film industry. But I don't see, the numbers, shared numbers actually sustaining going ahead, because I think Hindi will also see a very sharp reversal and a comeback. So I think our estimates clearly suggest that, in your CY22, and if you look at financial year 23, we are probably going to have about 18 to 20 Hindi films, which will collect more than 100 crores in terms of collection. Now, this number is the highest ever. So if you look at the track record of the last 10 years in terms of Hindi box office, the average number of films doing 100 crore box office collection is in the range of 9 to 10 films every year. And this number is virtually doubling, this year. So I think Hindi is going to see a sharp reversal. It may not, come back to pre-pandemic levels in the immediate term, but in the medium to long term, definitely we are seeing traction in Hindi, and this trend of, the regional film industry growing faster versus Hindi will actually continue. I think the Hindi box office will come back to the pre-pandemic share of 45 to 50%. Earlier, they were at about 55%. So they will largely come back to the pre-pandemic. So if you look at some of the regional films that have done well, if you look at Bahubali, KGF, I think KGF is a spectacular franchise. And going ahead, I think we're going to see KGF 3, we are going to see Pushpa 3. And I think franchise is something which does phenomenally. It really gets the crowd pulling. And the amount of box office revenue a franchise can make, the second or third franchise, is probably 2x or 3x as compared to what the first part would have made.
The South Indian movie industry will struggle to hold on to its increased share of the Indian box office. Going ahead, Hindi language films are slated to make a strong comeback and will claw back a large portion of their pre-pandemic share of the box office. However, many of South Indian cinema's defining characteristics, which also gave it a boost during the pandemic, will continue to pull audiences.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the clash of Bollywood and Southern cinema, let us move on to the race of two private lenders. ICICI Bank and HDFC Bank have been vying for the top position in the country's banking space for quite some time. While ICICI seems to be winning over the HDFC Group company, there are certain trends that investors need to watch out for. The two giants of the banking space, ICICI Bank and HDFC Bank, are battling it out to stay at the numero uno position. Quarter after quarter, ICICI Bank has been threatening the leadership of HDFC Bank as the former reported steady earnings growth. Even during the March quarter, the earnings of ICICI Bank beat market estimates while those of the HDFC Bank missed them. It comes as no surprise then that analysts cut their target prices on HDFC Bank post results while upgraded or maintained their targets on ICICI Bank. Going forward, analysts believe that steady growth delivery, strong asset quality, and low credit costs will help ICICI Bank deliver low-risk returns with consistent earnings per share compounding. Let's go to independent market analyst Ajay Botke to have a better understanding of what's sticking for ICICI Bank.
Quarterly numbers of ICICI clearly exhibit strong execution in terms of growth in key matrix, NII growth, NIMs, asset quality. Whereas I think if you look at HDFC Bank, I think the growth continues to be lackluster. I think the body blow that the bank had received due to the ban on launch of digital products for more than a year, I think the bank is making an attempt to claw back, but it is work in progress.
That said, there are few metrics that investors need to watch out for in both the banks to decide the winner.
If the economy were to slow down significantly due to a tightening by global central banks, continuation of FII outflows, and significantly high inflationary pressures, especially impacting a market as vulnerable as India because of dependence on crude oil imports, edible oil imports, fertilizer imports. I think we'll have to keep a close watch on the emerging trends in retail asset NPLs. And this will be true for both ICICI and HDFC because, if you see over the last few years, the growth in wholesale banking assets has been tepid. The growth has mainly been picked up on the retail asset front. Now, if it's secured retail asset like mortgages, I think the NPL levels are quite manageable. But for those franchises that have grown unsecured retail assets aggressively, namely personal loans, credit cards, auto loans, I think a slowdown could hold a nasty surprise in terms of a perk up in the NPAs there. So that is something we'll have to closely watch for both ICICI and HDFC. But I think because ICICI has gained aggressively market share because of the inability of HDFC to launch digital products, that is something that we'll have to keep a watch.
From an investment viewpoint, analysts see 45% upside in HDFC Bank and 42% upside in ICICI Bank from a one-year perspective. While MK Global opines that ICICI Bank can maintain its outperformance over HDFC Bank if it sustains its core performance and realizes top management premium, Nomura believes that tailwinds of improving NIM, which had helped net interest income and pre-provision profit growth in FY22, is likely at its peak for ICICI Bank. Those at JP Morgan also caution that ICICI Bank's re-rating potential has largely played out with the lender's valuation gap with HDFC Bank almost nil. Overall, ICICI Bank appears well placed to remain in the driver's seat within the banking pack from a near-term perspective as HDFC Bank faces derating and slowdown in growth. On Tuesday, investors will closely follow global cues for market direction. Besides, volatility is expected to rise ahead of the monthly FNO expiry. Among individual shares, AU Small Finance Bank, Bajaj Finance and HDFC Life will be the key companies to announce their March quarter results.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
HDFC's loss may well be ICICI's gain. Meanwhile, transactions through UPI are registering a rapid growth, and RBI's initiative to introduce it in the feature phones is set to take it to another level. Watch our next report to know why.
The Reserve Bank of India last month, in collaboration with the National Payments Corporation of India, launched the Unified Payments Interface for feature phone users known as UPI123Pay. UPI can in fact be used on feature phones even currently, but the process is USSD based. It can be accessed through NUUP or National Unified USSD platform using the short code of *99#. But this option is cumbersome and remains unpopular. Considering that there are more than 400 million feature phone users in India, UPI123Pay will materially improve the options for such users to access UPI. Feature phone users will now be able to undertake a host of transactions based on 4 technology alternatives. They include calling an IVR number, app-based functionality in feature phones, missed call-based approach, and also proximity sound-based payments. Let's go through each option. UPI payment through predefined IVR numbers would require users to initiate a secured call from their feature phones to a predetermined number and complete UPI onboarding formalities to be able to start making financial transactions without an internet connection. With the IVR providing multiple language options, customers can avail this service in their preferred languages. In app-based functionality, an app would be installed on the feature phone through which the user can access several UPI functions. In this type, the interested solution providers will need to partner with feature phone mobile manufacturers to enable a native payment app. This UPI app's look and feel is similar to smartphone-based apps, however with certain limitations of the feature phone. Currently, it can offer the majority of UPI functionality except for scan and pay, which is a work in progress. In a missed call based approach, feature phone users can access their bank account and perform routine transactions such as receiving and transferring funds, regular purchases, bill payments, etc. by giving a missed call on the number displayed at the merchant outlet. At the time of billing, the merchant will create a token with the customer's mobile number and the bill amount of his purchase. The customer will receive an incoming call to authenticate the transaction by entering UPI PIN. And last but not least, proximity sound-based payment uses sound waves to enable contactless, offline and proximity data communication on any device. Users can tap any phone and make UPI payments to merchants using a payment solution developed by ToneTag. The user first calls the IVR number and chooses the pay to merchant option. They tap their mobile phone on the merchant device and press hash once the device emits the unique tone. The user then enters the amount to pay, followed by their UPI PIN to complete the transaction. The merchant device acknowledges the transaction status and the user receives confirmation through the IVR call.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट।
Finally I agree.
SBI is the banker to every Indian.
UPI transaction volume saw a 97% jump in February 2022 to 452.7 crores from 229 crores in February last year. And experts believe that its adoption by feature phone users will significantly boost the transactions. That's all for today. For more news and analysis, log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.